This interview is a paid advertisement. It was produced on behalf of the company and is considered investor relations activity under Canadian securities law. All statements and opinions are those of the guest and should not be construed as investment advice. Please do your own due diligence or consult a registered investment advisor. Hello and welcome back to the New Orleans Investment Conference. Welcome back to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the JR Mining Guy over on X, and of course, your host of this channel, together with our good friend Brien Lundin, who's the host of the New Orleans Investment Conference, and really excited to introduce you to Shaun Heinrichs. He's the president and CEO over at 1911 Gold. First time on the channel. Shaun, it's great to meet you. Thanks for stopping by.
Oh, thanks, Kai. I appreciate it. I'm glad to be here with you.
Yeah, looking forward to learn more about 1911 Gold here. Let's start with a very high-level overview first, like 30,000-foot view. Who are you?
It's a good question. I ask myself that sometimes. But 1911 Gold is it owns a historic producer. It's located just 3 hours north of Winnipeg, right on the border of Ontario. It's roughly 100 kilometers to the west of the Red Lake camp. We reside in the same Birch-Uchi greenstone belt that prolific Red Lake camp sits in. This mine site's produced over 2.3 million ounces historically. Still has a 1.1 million ounce gold resource in the ground right now. We have all the infrastructure in place: mill, mine, camp infrastructure, tailings pond with capacity. We actually have a very large land position, over 62,000 hectares, a number of past producers elsewhere on the property, all under our ownership, so 100% owned, no royalties, no debt. The company itself is very much focused right now on getting the mine restarted. So we've been very active in terms of drilling out the resource, drilling new targets around the resource, so things that are new to the project, and trying to expand the scale and scope. But the important thing here is this is permitted. Very little left to do in order to get this operational. And so our focus is 100% on executing on that restart strategy.
Perfect. We'll get a bit more granular on timeline and things like that in a minute. But to catch everybody and get everybody on the same page, what's the cap structure? How much cash do you have, and warrants, options, anything we need to worry about?
The company has over $10 million of cash in the bank right now. We have about 14 million warrants, actually 13 million now. I just exercised my portion of that 14 over the weekend. Those are mostly due in the next month. A large portion of those warrants are in the hands of management, or there's one held by a large fund. So I expect those to come in with no impact to the share price, of course. We have a large shareholder in Eric Sprott, who's about a 17% shareholder. He's been active in the last several financings we've done, continues to be very supportive. We have a couple of corporates invested in the company, about a small position, but just under 8% combined. There's two of them.
Can you name them?
I cannot name them,
okay.
No, but they're both gold producers. They both went through similar cycle as us, where they had an existing asset, they rehabilitated it, got it restarted, and now grown the production profile of both of those assets. So basically, pages out of the same book that we're following right now. On top of that, we have a 22% institutional ownership, and we still have a very healthy retail base as well. Over 40% retail, mix of Canadian and American, and some as well as some international investors.
Just to follow up on the warrants, like once they're exercised, the 13 million warrants left, you're warrant free?
Warrant free, yeah.
Fantastic.
Yeah.
That's awesome. Yeah. So 10 million, or you know what? Different question. Business plan. I love the question about a business plan.
Sure.
Let's get more granular on that. Okay. Run us a bit through timelines and where do you see this company in maybe 5 years?
Sure. So just a little bit just on the steps we took to get here. So the first thing we did was we rebuilt the resource. We reestablished a brand new geology team, brought in people that were used to working in developing and operating mines, so we could basically de-risk the underground resource. Once we were able to reestablish that resource, we thought this is something that actually has a lot of potential, has a lot of exploration potential. So we initially started with mostly trying to grow the overall size, which is something we've done. We've drilled into a couple of new targets next to the mine. Now we've expanded both of those targets over 500 meters down dip, but alongside the mine. So these are areas we can access from the underground. This was all designed to support kind of our long-term strategy, which is get back underground, get the resource drilled out, develop as many working areas as we can underground to support a very profitable and long-term restart strategy. We're now active in the underground, drilling out the existing resource. So now we're into more resource expansion and extension phase. Over the next year, we'll be focusing mostly on test mining. We've got a large test mining plan for next year. We should produce over 15,000 ounces from 2 different target areas. We'll get that done probably Q2, Q3. We'll work on an updated resource by the end of the year. We've done a lot of drilling. We're going to have a lot more drilling ongoing over the next 12 months. So we'll get an updated resource towards the end of the year, supporting a preliminary feasibility by the end of next year. With the funds from the test mining run and any funds that we kind of raise in between, we might maybe do some kind of debt financing or something like that. We'll see how that works out for us. We should be able to get the whole mine restarted in early 2027. Everything's already there. We're working through the mill, we're working through the underground, getting areas opened up, rehabilitated, drills in there and churning. And then over the next several years following that, we'll sequentially open up other mines on the property. We've got 3 other ramp mines in near proximity to the existing shaft mine, which we're currently operating in. We'll open up those 3 ramp mines. That should allow us to increase production from 50, 60,000 ounces to more to like 70, 80,000 ounces. And then as we go, kind of looking out towards year 2, year 3, we'll be back into some of the regional areas. We have a resource on the southeastern part of the property called the Gama Rockland. That's got a 337,000 ounce 43-101 resource at 8 grams per ton. We're going to start drilling that out. We'll actually probably start doing that soon. That's going to be the next near-term satellite deposit on top of the existing mines that we're already working on the mine lease area. So once that's online, that's going to start feeding the same central mill, increase production. We'll do more drilling down in that southeastern part of our property where there's a number of historic producers which have depth potential as well as strike potential. We've done some drilling there. We've got some good indications. By year 5, we should see 1 or 2 of those areas developed and producing and feeding the same mill. So I don't want to make any predictions on the ounces produced, but we should.
I was going to say production guidance roughly, like you'll be putting up reports later next year.
Yeah, will. I mean, look, we're forecasting a ramp up from 50 to 70 to probably 80,000 ounces from the mine lease area, which is just the existing area of historic operations. And then longer term, as we start developing those projects down in the southeastern part of the property, we should be pushing over 110 to 120,000 ounces fairly regularly. And we can see that growing. The mill itself has the ability to be increased in capacity. So that should accommodate any growth and feed coming into the mill from those other satellite ore bodies.
No, fantastic. I really like your answer. Like my head is spinning, a lot of details, a lot of fact in there, but lots going on obviously, but it seems like you have a very clear strategy of where you want to be in 5 years, which is fantastic. Really like hearing that. Let's talk about capital requirements a little bit to get to that point, maybe to the first early Q1 2027 start of production point. What do you think? What are you estimating? You have 10 million in cash. Run us a bit through maybe the, what do you call it, imaginary cash flow perhaps for the next 12 months.
Sure. I mean, what we've said from the beginning is that this is an operation that needs probably around $40 to $50 million of capital. A lot of that's going into development, so you're opening up areas in the underground, you're rehabilitating the underground. The mill itself needs somewhere between $6 and $10 million to get it everything working like we want it to be. Get a new crushing circuit put in there, which we can do before we do the test mining run next year. And then there's very little in terms of camp infrastructure needed in the near term. Looking out 3 to 5 years, we're going to have to put a lift on the tailings, but by that point, it's something we can easily do with cash flow from operations. So really near term, we're focused more on that development, that mill rehab, and then making sure that we're drilling this deposit as much as possible. So I suspect the way things are going to go is we tried to launch a financing in September for $20 million, just under $20 million in total. That's currently on hold with the exchange. Likely there'll be something to replace that if that doesn't go through. That might be the last equity raise we need to do before we get fully restarted in 27. We've got some options on the table for us for other forms of financing that would be non-dilutive, but also what we're finding is with the shape of the market right now, we're actually able to access less expensive capital than you would imagine. If we were to go back like even a year ago, we would be paying a lot more for it, and I think right now we've got some reasonably attractive terms. So we could see us doing something else which will bring in 30 to 35 million of non-dilutive capital over the next several months. That'll be enough to carry us through the test mining project next year, where we produce 15, 16,000 ounces, and as you can guess, we'd make a significant amount of cash flow from that.
I was just going to ask about that as well. Like, how do you factor that part in? And are you going to mill at your own mill? Or are you going to be, okay.
Yeah.
Run us a bit through that process of the test milling, or test mining and milling, obviously. What does that look like?
Sure, that's great. I mean, like that's an important thing to kind of dwell on. The test mining run is designed to do several things. One, we've developed a new mining plan, a new mining strategy. We've actually put together our own internal mine plan. We are working with AMC, who's doing our preliminary economic assessment, for them to basically take that mine plan, augment it, incorporate it into their PEA report. but that still is going to be the foundation what we carry forward. So in there, we've designed basically development size of about 3.5 meters, development drifts, and then stopes that are going to range all the way from 3 meters down to 1.2 meters, which is the minimum width of our ore body. So this is a narrow vein, and we think we've got a mine strategy that will accommodate that. So the test mining runs
2.1 meters because of the bucket size, right?
Yeah.
Or is that the limiting factor?
No, you can go down to, yeah, you're right. Yeah, 2 point, yeah.
Something.
Bucket
Okay.
size, exactly. Yeah, the scoop size. Yeah,
Scoop
yeah.
size.
You can't get any smaller than that.
Yeah,
for sure.
okay.
Yeah. So we're going to keep things tight, keep the mine dilution to a minimum that way. And then when we get in there, we'll see how we do in terms of how much, what kind of grade we pull out of there. So we'll reconcile it back to the resource. We'll see the effectiveness of that mining approach. We'll understand better the cost of that. We expect actually the development cost to be less with that style of mining, because the tighter you're keeping your development, the less screening and bolting you need to do. So that lowers a lot of your costs that way. We'll expect to get higher grades from that resource. And then the other thing is we'll be running it, as you said, through our own mill. So we're going to be able to reconcile what recovery we're getting through the mill. We're actually going to be mining two distinct areas. One's associated with this L10 vein. The other one's associated with the hinge vein. So they're slightly different. I mean, the host rock is the same, but we'll see how the recovery, if there's any variation. Historically, they're all run very much the same, between 93 and 94% recovery in the mill, and that's kind of what we're going in expecting from that. So the test mining run is important to us from an engineering and a geological perspective. From a cash flow perspective, we expect the cost to be somewhere around 2,300 Canadian to do this process, and we obviously expect to be selling it for around $55,000 to $6,000 an ounce. We'll see where it is.
We'll see where the market is, right?
See where the market is.
It's absolutely insane. What's going on? Really excited to see the gold price that high. You can feel the excitement here in the room as well. Shaun, are you looking at ore sorting at all in that regard? Maybe underground ore sorting or at surface?
My short answer is we are looking at a lot of things, and ore sorting is obviously something that's caught our attention. What Talisker is doing is obviously very interesting to us. They're very similar in terms of ore body. We need to see where it fits. Where do we do it best? Do we do it underground? Because if we do it underground and we execute on our real strategy is to be drawing ore from multiple levels. So that means multiple ore sorters.
Yeah.
So it's kind of an interesting engineering exercise. We've got room for it. There's these very large areas in the underground which have more than enough room for a crushing and an ore sorting facility to be in there. Or do we do it on surface, which means we're not minimizing, unfortunately, ore and waste that needs to go to the surface. So, but we're definitely looking at that and seeing what makes the most sense. We're looking at different ways of crushing the ore underground too, as well, because that'll allow us to be a lot more productive.
I'm asking from a German angle because all the ore sorting companies seem to be German or European at least.
Of course,
So
all Germans are very creative. Yes,
absolutely.
Yes.
I'm trying to think, like Nitrum Catalyst, obviously some more drilling in that regard. Should we be expecting anything out of the ordinary? Like run us a bit through that, manage our expectations for the drill program.
Sure. I mean, well, look, we've got drill results kind of coming on the San Antonio West target, which we've drilled from surface. So that's coming. We've got near-term news release expected for the launch of a drill program out at Ogama Rockland, so that should be coming. I guess the big one that people will be waiting for is the preliminary economic assessment results, probably in January or February. That should be coming out. We've had a big management announcement last week, which was kind of important to us. We've got a chief operating officer in with Eric Vignette. That's already out there. We should start to get underground drill results, which I think will be very interesting for people to see, because you're drilling much closer to the resource all of a sudden. So you're hitting wider, thicker areas, different grades. That's going to be coming in December, and then that'll be ongoing because there's now 2 drills going underground and a third one's on the way. Then beyond that, it's going to be kind of the announcement of the results of some of the drilling into the 2 bulk sample targets. That'll be January, February. That'll crystallize what we expect and hope or plan to get from those 2 bulk sample target areas in terms of ounces and grades that we're finding in those areas. So that's all in the next 5 months. And then obviously the startup of that test mining run will be a big catalyst for us.
No, fantastic. Like your news flow is brilliant. For investors, like for news greedy investors, it's awesome because there'll be stuff coming out every other week, I would assume.
It will be, yeah. It should be very constant at this point.
Absolutely. Fantastic. Awesome. Shaun, it was a great pleasure to meet you. Thanks so much for running us through the story. I think I don't have any further questions. It was really comprehensive, really good overview. I really love how clearly structured the business plan is,
Great.
shows exactly where you want to take this. So
Perfect.
really
Thank you.
appreciate it. Shaun, thank you so much. And to everybody else, thanks so much for tuning in here to the Golden Newsletter from the floor of the New Orleans Investment Conference. If you enjoyed this conversation, please hit that like and subscribe button. Helps us out tremendously, reach a wider investor audience, and we just appreciate it. Thank you so much, and take care.